So today we'll talk about Adcore, which is a new investment idea of mine. I'm invested in this stock, and this company trades on the TSX Venture, ticker ADCO, and also on the OTC, ticker ADCOF. So today we'll talk about this company, about the stock. Before we begin though, as always, nothing in this video is investment advice, okay? I'm just sharing my studies with you. And with that said, let's begin. So today we'll talk about what this company does, about its business model, and we'll also talk about its numbers, as well about this company's valuation. So as we can see here, Adcore has a market cap of around 9 million Canadian. However, as this company holds how much? 6.5 million in net cash on its balance sheet. So that means that in the end, you would basically be paying only around 2.5 million for this company. So you would be basically paying almost zero for Adcore. Meanwhile, this company has delivered over the last 12 months, right? 32.4 million in revenue, okay? Moreover, this company is very close to break even too, as we can see here. And Adcore is also already generating operating cash flow. As we can see here, over the last 12 months, Adcore delivered 2 million in operating cash flow. So if this company's enterprise value stands at only 2.5, that means that Adcore is trading at a multiple of a little more than 1 times enterprise value to operating cash flow, which in my opinion is a steal, okay? So honestly, Adcore already seems like a buy for me. It already seems very cheap. So that was a quick overview of Adcore's numbers. And with that said, let's now talk about what this company does, after all, right? About its business model. So Adcore operates in the advertising sector, and its business model is actually a quite simple one. And I say that because Adcore operates mainly as a marketing agency. So the client arrives, and Adcore tries to create and manage the best possible advertising campaign for him, right? For the client, the most efficient one possible. So that's basically what Adcore does. And I know that many investors, that many people will say here that, well, if that's the case, then there's nothing special about Adcore's business. And well, I won't disagree with that. And I say that because, well, it's true. Adcore is a service-based company, which means that it is not very scalable, right? And which means also that it doesn't have huge margins. I mean, Adcore does have a good margin. For example, today its gross margin stands at around 40%, which is not a bad margin. 40% is a good gross margin, right? However, it is not an outstanding one. Adcore also doesn't have a huge moat, right? So yeah, there's nothing special about Adcore, about Adcore's business. However, I have some things to say here. So, first thing, okay, Adcore might not be a revolutionary business, okay, it might be an average business. However, man, everything has a price, okay? And what do I mean by that? What I mean is the following. Okay, Adcore might be an average business, but it is trading at a ridiculously low valuation. For example, as I told you, as I showed you, Adcore is trading at a little more than 1 times enterprise value to operating cash flow. Adcore is also trading, let's consider the enterprise value to sales multiple, okay? So considering that multiple, Adcore is trading at an enterprise value to sales of only 0.07 times. That's really, really low. So yeah, Adcore is an average business. However, it certainly doesn't deserve this kind of multiple. I mean, Adcore is a company that is almost profitable. It is already generating cash. It doesn't have any debt. Adcore is also showing some growth. Their peak was in 2021, as we can see here. Then the company's revenue dropped to 26.7, but since then, Adcore's revenue has been recovering, as we can see here. And today, Adcore's revenue is almost at its peak. Meanwhile, this company is trading for peanuts. I mean, this company is pretty much at its lows. The stock is pretty much at its lows, right? It dropped from its peak more than 90%, 95%, something like that. However, this company, in my opinion, has never been better. So for me, there's a huge asymmetry here. So that's the first point. Okay, Adcore might be an average business, but I don't think this company deserves the multiples the market is assigning to it. I just think Adcore is trading at very depressed levels. So that's the first point. Adcore might be an average business, but everything has a price, and Adcore certainly doesn't deserve these kinds of multiples. The second point is this. Yes, it's true that Adcore is a service-based company. However, over the past few years, Adcore has been investing. Adcore has been creating a new business segment. Adcore has been creating a technology division. So they've been developing some apps that cover the entire marketing journey of the client. As we can see here, Adcore currently has 9 apps, with the main one being Media Blast, while Proposally is their new app that will be launched now in 2026 and which is expected to be the company's biggest hit. So they have 9 apps that cover the entire marketing journey and that work separately and together too, as a bundle, as a suite, just like Adobe's products. Okay, so they've been investing in these apps. But okay, why is this important after all? Right? Why are these apps important for the company? Why is this technology division relevant? So in the first place, the technology division is important because it is way more scalable than the service division, right? Obviously. And secondly, it is also very important because these apps have excellent margins. So as I was told, these apps are showing 60% plus margins. So, excellent margins here, right? And why does that matter? Because what do I think will happen over time? You see, though this technology division is still very small, though this technology division only accounts for about 10 to 15% of Adcore's total business, so even though it is still a small division, right? These apps have been growing a lot over the past few years. So, what do I think will happen? I think these apps will continue to grow, right? And as I was told, it would not be unimaginable to see these apps, to see this technology division accounting for 50% of Adcore's total revenue. Okay, so I think this technology segment will continue to grow, which will lead this company's gross margin to expand. After all, if the service segment is showing a gross margin of around 40%, and if the technology division has a gross margin of more than 60%, well then, the bigger this technology division gets, the higher, the better Adcore's gross margin gets. So eventually, in the not-too-distant future, we could see Adcore's overall gross margin at above 50%. The point I'm trying to make here is this. Adcore could go from an average business to a very good one. It could go from a service business to a technology one, much more scalable and profitable. And then what I keep asking myself is this. What would be a fair multiple to assign to a company like the one Adcore could eventually become? Right? Would I be crazy to consider that Adcore could eventually trade at 2 times enterprise value to sales? Honestly, I don't think that's unimaginable at all. I think that a company like the one Adcore is becoming, I think a company like that with a 50% gross margin, for instance, already profitable, already generating cash, with no debt, with a very scalable business model, well, I think a company like that could easily trade at 2 times enterprise value to sales. Now, if that happened, where would that take us in terms of market cap? Well, if Adcore's current revenue stands at 32 million, for this company to trade at 2 times enterprise value to sales, its enterprise value would need to be 64.8. So let's say 65 million, okay? However, we still need to consider that Adcore has about 6 million Canadian in net cash on its balance sheet. So to find the respective market cap, we would need to add back these 6 million Canadian. So with that, 65 plus, let's say, 5. So for Adcore to trade at 2 times enterprise value to sales, its market cap would need to get to 70 million. 70. Okay? Now, let's recall where we are trading today. So as we can see here, Adcore's current market cap stands at only 8.8 million Canadian, right? So, if this company reached a market cap of 70 million, that would mean that this would be a 7x investment. Okay, so not bad at all. However, Adcore's revenue will probably grow. So let's say Adcore's revenue reaches 40 million Canadian. Okay, well then the math would change completely. Well then, to trade at 2 times enterprise value to sales, Adcore's enterprise value would need to reach around 80 million. The point I'm trying to make here is this. Honestly, Adcore could reach a market cap of 100 million Canadian. That's my opinion. And again, nothing in this video is investment advice, okay? But I can see that happening. So in summary, that's pretty much why I decided to go long in Adcore, okay? That's why I decided to invest in Adcore. It's true that this company has an average business. However, Adcore is evolving, is getting better. And I think that the market is completely ignoring this transition. And even so, even if Adcore remained as a service-based company, man, this stock is trading at such low multiples that even so, I think this stock would still be cheap. So if on one hand, Adcore is very cheap, on the other, the company is evolving. So that's why I decided to go long in Adcore. Okay? Well, that's it for today, and see you next time.